All right, Ben. I don't know how you feel about binge watching or series. I love them personally. I think I'm a kind of I want to take Bitcoin in a series direction where over the next multiple weeks I'm going to do some series of reasons and explanations of Bitcoin for myself to understand it better, but hopefully for our viewers and maybe you might learn something too. So this series, this next few videos are going to be the why of Bitcoin. And of course, if you're talking about why, a big part of that is going to be returns, right? Return on investment. You want a good return. So I've got some charts to go over and a few quick videos. So let's just jump in and learn why.
Most people don't realize diversification is dead. And it sounds like this is a crazy idea, but this is going to give you the full understanding. Liquidity is everything. It is increasing on a globalized level at 8% a year. You can also add in 3 or 4% global inflation. So you've got a 12% hurdle rate. That is staggeringly difficult to beat. But if you don't, your asset allocation is going to make your future self poorer. The thesis that I'm about to outline is also based on the fact that once I started digging into the debasement trends, I realized there is two and only two massive secular trends. One is cryptocurrency. This is the log chart of Bitcoin, which over time, as we know, has produced since 2012 alone, 20 million% return. The other mega trend is the NASDAQ. These are secular trends that are outperforming everything. These are the two key assets that matter to me when I'm talking about portfolio allocation, because everything else is actually secondary.
All right. So Raoul Paul, one of my favorites, he's talking about the debasing of currency and the liquidity as it pertains to Bitcoin and the returns of Bitcoin. As you didn't hear him wrong. He said 20,000% return in the life of Bitcoin. And that's all due to the debasing of the currency, the weakness of the dollar, the whole reason Satoshi created the Bitcoin in the first place, right? Bitcoin represents a bunch of other things, but that's what we're going to talk about right now is the return. So we're going to jump into this GMI report that I showed you the other day video-wise. I'm going to try and do a little bit better job of just hitting some of the highlights, but going into it a little bit more. You just saw Raoul in that short little clip point out a couple videos. So since 2008, basically the great crash, financial crash, we've seen an average of an 8% increase in liquidity or the dollar printing, for lack of better words, over the last, going on 16 years. So we're seeing dollars printed, which when you print dollars, it devalues the dollar, right? It's worth less. So liquidity is increasing, which is what's important. Bitcoin hits the map in 2008. It's off everybody's radar for a number of years, finally gets picked up, and you start to see they're starting to chart Bitcoin as it goes along here. Bitcoin, again, being invented specifically because Mr. Satoshi Nakamoto did not care for what was happening to his money and everybody's money for that sake. We can all you can agree with that, right?
Preach.
Here's a colored chart. This makes it a little bit easier. Bitcoin operates, and money for the most part operates on the business cycle, which is a 4-year cycle where money is being pumped into the system and being withdrawn, at least as far as the US goes. So it's been labeled, to make it easier, spring, summer, fall, and winter. And each season brings different things. For example, spring, which we're in now, and summer tend to bring the biggest returns. Summer and fall are the best returns, the biggest returns. Spring is mediocre, and then fall is usually a decline. And you can see that. So here's the liquidity chart here going across the seasons, but on an uptrend because more and more money is being printed. So there's more and more money in the system. NASDAQ is also increasing. So equities are gaining in, I use this word lightly, but in value as they print more dollars. Whether it's gaining in value is somewhat questionable depending on who you talk to, just because they're printing more dollars. So they're going to go increase in actual pricing. And then you got Bitcoin, which we're studying right now. So as you can see, let's take just kind of the last few months here. This was in 2020. You had summer here. You can see it kind of went along and then jumped up. Fall, same thing. Winter came down. We're back into spring, kind of climbing up again. So many people are expecting this to continue to climb and go way up. So I'm going to show you a couple other charts and also a video or two here that's going to exemplify this. So let's jump back over to Raoul Paul's video explaining this here.
It's kind of a reflexive process, which really builds on itself, because in fall, earnings are at peak. So equities are driven by earnings plus the investment cycle. People have got more money to invest. So fall, so that would be equate to 2025, should be really strong for tech and strong for this year too, which is summer, coming off green, which tends to be very good for spring too. So this is this exponential age tech trend that I talk about. But crypto, same cycle. This is the crypto cycle. We can call it crypto spring, crypto summer, crypto fall, crypto winter. It's the same as the election cycle. It's the same as all the thing. The presidential cycle. They're all the same. So crypto tends to do decently well in spring. The anomaly was 2020 because of the pandemic. It did very well in spring, less well in fall. Generally speaking, like the NASDAQ, fall is when the real price action starts. My guess is we'll probably be more similar to 2017, 2013.
Okay, so the main takeaway from this chart here is we have seasons within these business cycles, which is a 4-year cycle. Bitcoin mostly goes up 3 out of the 4 years and down 1 of the years. But take note that it's on an up trajectory. It's just going up long term by leaps and bounds. So you don't want to get too distracted with the ups and downs, because as we both know, the market is very turbulent. Okay, here's a combined chart with the liquidity, NASDAQ, and everything code. And here's Mr. Paul again.
Don't care directionally right before you start having a larger correction. For those of you playing along at home in crypto, here is the same. The cycle gives you a peak of 400,000 in Bitcoin. Again, I have no idea. It could be 50% wrong. I don't really care. The point being is the structural rise in prices lies ahead, and it's going to be reasonably big. Now, again, what are the dates between 2025, June and December? Does crypto peak early? I don't know. I actually don't think so. It would, because we're going to more closely follow the 2013, 2017 cycle, but it's not clear. So I keep an open mind. It's not about nailing the top. It's not about getting the price right, but directionally getting this whole trend right.
Okay, so as I was mentioning, the idea is that it is on an up trajectory. So it's going to be ups and downs, but don't get hung up in those ups and downs. Just focus on the long term. So you have to be an investor state of mind, not necessarily a trader, is what he's getting at there. So I want to bring up that chart real quick. So here's a little bit better chart. As Raoul Paul mentioned, 400 to 500,000 is what their charts or their information is showing them. Not a guarantee, but still yet very impressive numbers compared to, I think we're at 70,000 today.
Yeah, and he said it could be 50% wrong. So maybe only $200,000 of Bitcoin.
Yeah, that's terrible. I'm going to hold him to it. We've kind of seen the history of Bitcoin, the return so far since its inception. This is going to zero in a little bit more on the halving, which we just had, which, as you know, happens every 4 years. This year's one, or this cycle's one, just happened in April. So they're going to talk a little bit about that, the halving itself, and what to expect from here.
It's very typical behavior around the halving. So essentially what happens is into the halving, you get a rally, a strong rally. Then you get some sideways chop for a period of time. And then post-halving, you get a fairly large dump before prices start to recover. So I think that's where we are now. And despite all kind of the mid-curving going on around the halving, I'm going to buy today, I'm going to sell tomorrow, it's going to be April 14th, which is the low, whatever it is. This is really the only chart that matters from an investor's point of view, I would say. If you're a trader, that's your thing. I'm not a trader, I'm an investor. So this is more appropriate for my time horizon. And post-halving, we've always seen prices much, much higher.
Okay, so again, consistent theme here. It's going up, up, up. You have a little bit of a slowdown sometimes around this halving, a little bit of a dip even, which we had such a climb up right before the halving. We've basically just kind of stayed steady so far. So, but it's about to really get good is the point that they're making there. So let's move on.
I'm going to bring it all home now. You've heard me talk about the supermassive black hole, the crypto black hole. You've seen everything that we do to reach the kind of conclusions that we do. And now I'm going to come to the conclusion. The conclusion is straightforward. We're dealing with the technology adoption. It's the fastest pace of adoption of any technology that's investable. AI is not investable right now. And it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is showing too. We're comparing it to IP addresses. So we get to 1 billion wallets. That's a huge number. And that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro performing asset of all time. It's the best risk adjusted reward of any asset in all history. It's an alien asset class. And that trend of $2.5 trillion today to 10 to 15 trillion this cycle to 100 trillion by about 2030, 2032 is driven by this adoption curve. That's when you get to 4 billion active wallets by the end of 2030.
So there you have it. We are at roughly 500 million users right now, and it's headed to 4 billion is the estimate by about 2030. 2.6 trillion market cap, I think, in crypto right now, and they're expecting it to be possibly 10 to 15 at the end of this cycle, so the end of next year, end of 2025, and as high as 100 trillion by 2030 or a little after.
Saving your coins for this bull run or for the next bull run? I guess with Bitcoin, you're just hanging on to it, but your altcoins, are you just stacking through this whole bull run? Or are you going to sell some and get more Bitcoin?
That's a great question. And that's been a lot of what I've been developing over the last, 2 years. To answer that simply, I don't feel I'm smart enough to outdo the market. So I want as much Bitcoin as I can possibly get. Plus, I believe I think it's the apex, right? It's the ultimate.
According to Saylor.
Yeah, well.
It's the only. There is no other. There is no second.
Yeah, you know what's very interesting. I don't want to draw this out, but I don't understand why people can't see that Bitcoin may be the apex, but all of these other, not all the other currencies, many of the other are creating products or technology or whatever that is super useful. It's either all Bitcoin or not Bitcoin. For whatever reasons, people seem to struggle that I've noticed with having a place for both. It's generally not either or, it's usually and there's places for both of them. We've had this discussion. So to answer your question, I'm accumulating as much Bitcoin as I can. I have a certain number that I want to get to. Once I get to that number, then I will probably not accumulate as fast. As the market peaks, I'm hoping to time it as it kind of goes up towards the end of next year and sell some of that off. I'm also buying, other projects, some, major ones like Solana, and then also some very low cap coins. So I'm doing a little bit of both, but the whole goal is to make the best returns I can to buy as much Bitcoin as I can. That's the strategy for the rest of my life, basically. That's what I got, a brief look on the returns for Bitcoin and why that is important.